Liebe Zuschauer, herzlich willkommen zu Inside Wall Street vom Parkett der New York Stock Exchange. Ich bin Manuel Koch und bei mir ist Mark Otto. Thank you so much for joining us, Mark.
Thanks for having me back.
Mark, we saw a more sleepy week, but in the end on Friday we saw some IPOs here on the floor of the New York Stock Exchange, so it was an exciting day. Is there a change? Are more companies coming back on the floor?
That seems to be the sentiment. We are seeing an influx of listings and potential listings actually coming through the exchange. It probably has to do with the timing of the market. We're cresting at near all-time highs. The market's been in a narrow band, so it looks like it's a good time in IPO.
And do you think it could be a successful time to go on Wall Street now?
Absolutely, it looks like the timing is good for both domestic, and we are looking for potential international IPOs as well. I know that for a fact there's going to be some IPOs coming from China in the near future.
So the earnings season is almost over. The big names already published the numbers. What is your result of all these numbers?
Well, I think it sort of met everyone's expectations as far as traders are concerned. We've sort of seen this movie before as far as earnings are concerned for the last several quarters. The companies are meeting or beating expectations, which are lowered by analysts. When you look at the revenues, they're missing more on that. So I think that they haven't been really a catalyst to the up or downside.
What is for you important at the moment? Where is your focus?
Well, I think most traders are all looking at QE3. When the unwind will begin, and we're seeing the market really react off of that. So at the beginning of this week, we had 3 Fed speakers 3 days in a row. They basically were saying things like, it might be sooner than later. And the market really reacted violently to that. So, early in the week, we saw a dip. Then we saw some macroeconomic data come out of China, and we saw somewhat of a rebound. We've been in that narrow channel in the S&P 500, though, of 1670 to 1700. So I think it's going to take some sort of catalyst to break through one way or the other.
Sometimes you hear, it could be September, maybe not, maybe yes. You never know what they will do. Maybe they don't know yet, even by themselves. But what would you expect? Will we see tapering this year?
It's looking like it's a stronger possibility, especially from the rhetoric that we heard earlier in the week. So the consensus of the 3 Fed speakers was it would be sooner than later. So it wasn't as violent as a reaction as we saw from Bernanke's speech back in late May. Late May, he sort of signaled that the unwind might be sooner than later, and the market sort of took 6% off from that, and we saw a decline in June. So it took Bernanke himself and several other House speakers to come out and sort of torque the market, sort of back off a cliff, if you want to put it that way. So this reaction wasn't as violent. It could be that the market's sort of being tempered for it.
Is it maybe already priced in, or do you expect like a big pullback when it's really coming, maybe in September?
Well, I think all these Fed speakers getting out and talking about it is really tempering people's expectations. I don't know if it's in the market, simply because we did see a dip earlier in the week, and we made all that ground back already. So, I think when there's a definitive number, there might be some sort of knee-jerk reaction. However, traders should really think about the fact that if there is a pullback and the timing is this year, it simply means that the economy is that much stronger, and it should be able to go forward on its own.
So what do you expect for the next weeks? Will we see like a summer break? Is it a sleepy market, or you never know, and maybe we see some data coming out of China?
Well, typically speaking, we're in the later part of the summer. A lot of people are away at the Hamptons, so the volume is typically lower. However, that does add to the fact that if there is a knee-jerk reaction to any sort of news event or macroeconomic data, it could be more violent, simply because the volume's not there. I think that going forward, over the next week, there's going to be a slew of macroeconomic data globally. So next week, we're going to see GDP, CPI, PPI, and retail sales from around the globe. So there's a lot of things that everyone can actually react to. I think Tuesday, more or less, is what I'm going to be looking at. So the German Zoom numbers are going to come out. U.S. retail sales are going to come out. And there's a Fed speaker speaking on Tuesday, so you always got to watch that.
And in 2 weeks, we see the FOMC meeting again on August 21st. Are you waiting for this meeting?
Yeah, on the horizon, there's that. There's the G20. There's Jackson Hole, all on the horizon. We're going to probably hear more and more about it. Anything that's going to add transparency to the state of the global economy, to what's going on in stimulus around the world, that's what everyone's going to be queuing in on.
You already mentioned it, the retail sales next week. It's always an important number.
Absolutely. 2/3 of the U.S. economy is consumer spending, so that's really a critical piece of information. Even though, like I said, there is going to be a slew of information from around the globe. So I think, that adding with the German zoo numbers and the fact that there will be a Fed speaker on Tuesday, that could be a pivot point for the week as far as data coming out and getting reaction from the market.
So when we would stand here on next Friday, what do you expect? Is the market lower, higher?
If I had that crystal ball, I wouldn't be working down here. I think, if you want to make a broad-based projection, I think it's safe to say that more than likely we will be range-bound, barring any violent reaction or news that comes out. 1670 S&P 500 to 1700 has held. We've crested above it for a short duration of time and reverted back below it. So, going forward, I anticipate that's going to be a resistance point, both psychological and technical at 1700. If we actually crested through that and had a close above it, from there 1707, 1715, 17 and a quarter are resistance points going higher. Going lower, we're going to get support at 1690, 1683, and then 1675. So, but the range is 1670 to 1700 right now.
Mark Otto of J, Streicher. Thank you so much for joining us. Und Ihnen, liebe Zuschauer, vielen Dank fürs Zuschauen. Bis bald hier vom Parkett der New York Stock Exchange.